Welcome to RANsquawk, your morning briefing for Tuesday, 23rd of March 2010. In terms of what we've seen so far here in Europe is a bit of tightening in terms of the 10-year Greek bond spreads, a bit of reversal from what we've seen yesterday, and it has sparked a bit of risk appetite across the board with the stock futures trading in positive territory and bond futures slightly lower. In terms of some of the reasoning, we have seen various comments of EU officials, most notably from EU's Barroso, who says they want to form some sort of agreement this week, but again a lot of uncertainty on whether that will be the case. That meeting in Brussels is due to take place on Thursday and Friday. In terms as well of the Greek finance minister, also did aid a bit of risk appetite after he said that they could refinance their debt within the market as long as they expect to fit their stability plans that are ongoing. So we're down around 13 basis points or 13 basis points tighter in the spread at the moment. And in terms of other notable news flow, has been in terms of economic releases, where in the UK we've seen the latest in terms of inflation numbers. CPI in the month of February just had quite a substantial fall from the previous 3.5 to 3%, which was 0.1 lower than expected on a year-on-year basis, which did indeed give gilts a bit of a bid at the time, and did see cable in the foreign exchange pairs test that 150 handle. In terms of other notable news, if I just refer to my sheet for some Fed comments which did come overnight of note, we had Fed's Lockhart said that rates are appropriate for economy facing headwinds and are very accommodative. In terms of Fed's Evans added that unacceptably high unemployment and well-contained inflation make it likely the US monetary policy will remain accommodated for at least several months more. So looking to reiterate that stance that rates, at least for the time being, the next 6-month period or so, will be kept at an exceptionally low level. In terms of things we're looking out for today on the calendar, from the UK, the CPI distributed trades report, that's due at the top of the hour, 11 o'clock London. And then in terms of US data, Richmond Fed manufacturing, home price index and existing home sales are taking the forefront for the US data. We'll also see the business confidence number out of Belgium, which is often seen as a precursor to the German IFO. That will be due at 2 o'clock London. And then in terms of fixed income as well from the US, we'll have the first of the week short auctions, the $44 billion in the 2-year notes.